In this example, let's focus on a long setup. If a triangle is applied here, we can anticipate a potential breakout occurring to the upside due to the overall uptrend conditions the market is in right here. A long entry may be taken at this point here. A stop loss placed potentially below the triangle bottom or below a previous swing low, depending on the trader's risk tolerance, which is relevant to one's account size or emotional level. Now, the great thing about trading with triangles is that they involve a level of symmetry with the market. Generally, one can calculate a potential exit point by this strategy working with the parameters of the triangle that already have been formed. For instance, measuring the distance between the highest point formed within the triangle and then the lowest point can provide a distance of measurement that can be employed for an exit strategy. To highlight this in practical terms, the distance measured here equals roughly 70 pips of movement. On many occasions, if the price breaks to the upside, there is a level of symmetry that comes into the equation. Potentially, you might have the market move 70 pips higher from the point where it broke out of the triangle. So using the length of the triangle to determine an exit point is a common approach when trading with triangles. Look at how the market hit that target of 70 pips at this point. Let's now look at a different technique one can use to trade with triangles. For a short setup, once the triangle has been applied and one expects at some point that the market will break out and make new lows, one can enter their sell order at this point right here. A stop loss can be placed either above the triangle or above a previous high around here, ensuring a small risk if the trade goes up instead of down. A trader can use the lines that form the triangle to guide them to an exit point. For instance, take this upper line, which is sloping down. Double-click on the line itself. Hold down the control button on the keyboard, and this will duplicate the angled line used to form the triangle. The key for creating a duplicated line is to connect it to the lowest point within the triangle at this low right here. This provides a guide for the trader to close or exit their position once price goes near the line, which will act as support, which indicates a time to react. Here is a long example of how this works. Symmetry is everywhere on the charts. They are emerging patterns that reoccur over and over. It's about recognizing the right environment where the symmetry lies in order to use its application in real-time trading. Using the symmetry, distance, and slope from these triangle formations to govern these trade setups can be applied to a 1-minute chart or to a monthly chart. Defining the direction is the key when applying the parameters of the triangles to create setups of these support and resistance areas. This concludes this educational series on triangle patterns. Please join the largest community of traders worldwide in our free live trading room. Entry is free for life, where professional traders trade and educate in real time these triangle pattern strategies. A place to be, where everything is free.